Okay, good morning, everyone. My name is Brent Gall. I'm the president of the Yankee Model Investment Club. Welcome to our December 2020 meeting. I have a few introductory slides that I'll go through, and then we'll get to the main agenda of the meeting. Our investment club is a Better Investing Model Club. We're a fully functional club with real money, but we are open to observation by the public to allow members of the public to see how a example investment club works and ask questions on the operation of the club, as well as hopefully to motivate you to create your own clubs with your friends and family. We were formed back in 2008. We're currently 6 members spread across 4 different states. We went fully online back in 2011, and we meet monthly on the second Saturday at 11 a.m. Eastern. We are always looking for new members. No previous investment experience required. We mentor new members by an existing member, and really no limitation on where you live, except for the one fact of whether your state tax laws require a club to file a tax return. For all partners, you must be a member of Better Investing. You're expected to actively participate in the club's activities. This isn't a passive investment vehicle, and make stock presentations using the stock selection guide in rotation with other members. At the 6 member counts, we currently present like about twice a year, each member. Overall operations, we follow Better Investing principles. We show respect for fellow club members. We're all still learning, so we treat each other with respect. We perform an annual audit, file tax returns, and follow our partnership agreement. Any questions, or if you're interested in joining, or if anything comes up through the course of the club that raises a question, feel free to reach out to our secretary, Jack Finn, at the email address shown there, and I'll put the email address up at the end of the meeting as well. For the structure of this meeting, we follow a standard agenda. A PDF of the agenda should be in the handout section of the GoToMeeting control panel on the side of the screen. All visitors will be muted, but you can type in your question using the control panel as well. Joe, our moderator, will respond to those questions, and will speak up if there's a general concern question that would apply to the entire presentation. And we'll have a general Q&A session at the end of the meeting if there was any other unanswered questions. One thing that we would want to ask is if you have any suggestions for the educational segment. Every month, except for this month, we took a break in December, but in general, we spend about 5 or 10 minutes of each meeting to present a financial term and information on an industry and an analysis tool or another topic that can be helpful to the general stock investor. There's really no set syllabus that we work from for these topics, so we're open to suggestions for what our audience would want to see. So if you have any ideas, feel free to submit them into the questions box in the GoToMeeting control panel. And in the green box here, I've listed some of the suggestions we got last month. So if there's any other ideas that you have, feel free to put those in. I can't commit to actually presenting them, but it's always good to know what interest areas the audience has. And just to comment on organization and registering for this, if you received an invitation to this meeting from a friend or family member, it's best to register yourself with Better Investing, just so you get reminders for the meeting and are notified of any time changes or date changes. So you can follow the link shown there. Even if you just go to betterinvesting.org, you can navigate through to get to the online chapter events, and then click on the register here button to actually put in your contact information. And then finally, a general disclaimer, none of the people presenting today are financial advisors. None of the information presented should be taken as investment advice, do your own research before you invest your money, and make your own decisions. And with that, we will jump to the general agenda of the meeting. I'll turn it over to Jack to go over the minutes from last month's meeting.
Hi. Let's see. Last month we had 223 registered for the meeting and 42 visitors.
You sharing your screen, Jack?
Oh, sorry.
Okay, thank you.
See my screen? Okay.
Yes, sir.
Yes.
Okay. The minutes were accepted from last meeting, and I put a link to the public folder here in the minutes, so you can get at the minutes and all kinds of other stuff that are there every month. Treasurer's report and the bivvy positions last month. The size distribution of the companies is as shown here. We're aiming for 25% small and 25% medium. I'm sorry, large. We're a little overweight in large at the moment, but our small has been coming up in percentage gradually. Medium's supposed to be 50%. It's a little low as well. Last month we had a prospective member, David Sky, present Community Bankers Trust, and a PDF of his presentation and SSG are there, and his presentation spreadsheet. We decided not to buy that, though. We decided to take our money and buy Miller with a limit of $32. And as far as I know, that I think we canceled it yesterday. So we didn't spend any money last month. I presented understanding sector diversification, and a link to my PDF is there. There's not going to be an education segment today. Ira's going to present the stock to study. The last 9 meetings are now up on YouTube, and here's the link to the November one. Becoming a member info sheet was revised by Brent and is up for comments and revision. And I think we're going to talk about it today. Bill Stafford's application, we're still waiting to hear from Bill on his technical problems. We decided to reject Fidelity bond coverage that's offered through Better Investing, as we don't think we need it given the security procedures in Fidelity. We accepted David Sky's application as a member, but David decided against becoming a member. We had some questions from visitors, and Brent's already talked about them. Joe Farrell recommended this very interesting series of presentations from the Michigan chapter, Ken Kavula and company. And there's 3 here that at least relate to the 3 questions discussed or suggested. And I recommend them all. I've seen them. I think I've seen them all. And that's it.
Okay, thanks, Jack. While you were presenting that, I got a note from Steve. He's not going to be able to make the meeting today. Do we know if, do we have the cell phone of Liz. We
Liz,
can
I
contact her.
think Liz is on the, for some reason, Liz is on the list of attendees. So she's
Oh.
here.
Let's just see
Maybe,
if we can.
Joe, can you make her,
Liz, are you with us?
I am. Can you hear me?
Yes. Sorry
I
about
hi,
think-
that.
Liz.
Yeah, I think I logged in on the wrong link. Do you want me to log out and log back in on the presenter link?
No, I
That's-
think.
You're fine, just like you are.
Yeah.
Okay. Hey, everybody.
Hi.
Hello. Good to have you. Okay. Thanks, Jack. Let's move on now to the treasurer's report. So Ira, I'll give you presenter rights.
Okay, can you see my screen?
Yes.
Yes.
All right, since we had no educational presentation today, I have a market quiz. Who knows what an ESG fund is?
Hmm.
And any member of the club?
No.
No idea.
Okay, it stands for environmental, social, and governance,
Ah,
which and there are some funds that have been set up now that look at factors other than the the balance sheet, basically the financials. They look to see that a company is good for the environment, that for social they look to see that their stakeholders besides their stockholders are considered, and G for governance, that they have things like separate CEO and chairman of the board and things like that. So this is a new thing, a new type of fund, and people who feel social responsibility are piling into these funds. Just thought I'd let you know.
Okay. Thank you.
And that's our education for today.
Yeah.
Okay, so here's our current holdings. You can see Athene, unfortunately, we had whatever 1,000 plus profit, and now we have a slight loss in it. Since I gave a heads up about Athene and the investment advisory service, saying that it was too complicated for them to figure out, although they thought it was a good stock. So we have $2,300 and $304.93 in cash. Yesterday, I canceled the good till canceled order from Miller at 32 because it never hit 32 during the month. It's just been going up.
that's a good problem.
Yeah. Member status report. Could look at that. Transaction history. So we received a dividend, 1 cent. We had no transactions last month. We picked up some dividends. You can see we have Gentex, Visa, Tractor Supply, Essent. Okay. And except for Shriram, who had a technical difficulty, member payments are up to date. Performance benchmark. Since inception of the club, 13.9% versus Vanguard 500, 14%. And looking this year, 17.3% versus Vanguard 500, 16.5%. Investment performance report. Middleby is topping the list right now. Member performance.
I'm doing great.
Yeah, nice work.
And let's look, since it's near the end of the year, member tax allocations. So this is the type of tax information you'll be getting on the K1. And as far as tax loss harvesting, the only real one we have of significance would be S for 1570, if we were interested in selling that for tax purposes. And that's my report.
Okay. Thank you, Ira. If there's no questions on that, yeah, please proceed if you're ready. The stock study.
Okay, Ken Kavula mentioned Sprouts Farmers Market at one of the webinars, and I did a value line growth screen, and this one did come up on that. Now, the question is this a value stock or is this a growth stock? What do the members think here?
Sales growth is a little slow for growth. Borderline, I'd say.
Yeah, the PE is 10 or less, and that's a flag right there that it's mostly a value stock. But the PEG ratio is 1, and it shows up on a screen kind of as a growth stock. So it's sort of, who knows? But the market is treating it definitely as a value stock. My other question is this a consumer staple stock or a consumer discretionary stock?
In groceries, it's usually staples, but this is kind of expensive groceries.
Exactly, that's my point here. Now, we all like bananas, and most of us anyway, but do we need organic bananas?
They're $1 a piece or something, right?
Yeah. So this is, it's like in between staple and discretionary, and in between value and growth. Okay, nevertheless, it's a specialty grocer. You could read it, what I wrote here. Health-oriented assortment. Mostly, a lot of their profit is from produce. I'll show you some of their investor PR here. And I won't read it all, but you could look at it yourself here. They put their produce in the center of the aisle, unlike grocery stores where you find it on the side. That's their specialty. They have, and they're small stores. During the pandemic, they definitely have curbside pickup, and they've been doing deliveries using Instacart, which has cut somewhat into their margins because they have to work with Instacart. They consider themselves an ESG company, and this is why. That's why I mentioned ESG. This is their strategy. They have a new manager as of June 2019, and they're trying to have smaller stores with equal profit. They're trying to get their distributors closer to where they are. And they're not doing nearly as much advertising in the traditional sense. They're going more online with advertising. This is their target audience here. They're based mostly in California and in southern states. Have you seen it, Brent?
Yeah, I was gonna elaborate on it when we open it up to questions, but yeah, there's one right down the street from me. It's we view it as like a less expensive Whole Foods, a less expensive option to Whole Foods, but fairly small store. They focused a lot on like bulk bin, for dry goods and oats. I think they have bulk spices and medicinal herbs and things like that. But pretty good selection, pretty clean. Usually a lot fuller than Whole Foods whenever I've walked in there. So it's a good store.
That's good to know. We don't have it here in Connecticut. So.
Yeah, it looked like it's only kind of in the western states, and that's what I was going to say, that you might consider it a opportunity for a growth company if they're trying to expand into other markets, and move east.
Which they are doing. Here's this is what they show here for where they are. And they want to expand into further markets for sure. They want to get their distribution centers closer to where the stores are. This is part of their strategy right here. The company is based in Arizona. They're aiming for 10% growth. Target of 10% or more beyond 2021. This is some of their financials here. Okay. So their debt to cap is 65%. It's trending down in 2020. The industry average is 71%. Now Morningstar is projecting 8% sales growth, and they have no moat, and they have very stiff competition from the likes of Kroger, Walmart Plus, and all the big chains. Their five-star value is 17. One-star value is 33. The current price is just slightly below 20. The fair value, according to Morningstar, would be $24.50. They're 4-star. The value line is showing I have 9% growth and 9.5% growth, earnings per share. And let me show you a value line here. Now, if you look at value line, if you look over here, they show sales growth estimate 11%, but realize that that's a comparison of years 17 to 19 to 23 to 25. So I did not use that number. What I did was I looked up here at the sales, and I used 2019 and their projections going forward. And I came up with a lower number. I came up with like 6%. And I did the same thing on their, if you look here at their earnings, they say 9.5%. Looking at their earnings per share based on 2019, I came up with about 9%. So I think that might be a better way to calculate future projections from Value Line looking over here versus looking at their past 17 to 19, 23 to 25 numbers. In any case, it gives you a lower projection. Value Line timeliness is 2, safety 3, and technical is 2. And that's not from their latest, from their report, that's from their summary and index as of 12/11/20. Their annual return projection is 10% low to 21% high. Looking at CFRA, they have a 3-star hold with a 12-month target of 23. They think the earnings in 21 will be $1.54, whereas Value Line thinks it'll be about $1.65. So I used 6% and 9% sales and earnings per share in my projection. Their pre-tax profit margin, 3.5% in 2019, is down from 4.5%. And it's been predicted that it's going to stay down. Now realize margins on grocery stores are very low. And this is comparable to what you would expect. Return on equity is up in 2019, 26.2% versus an average of 21.2%. This is their PE history. You can see the numbers here. The current PE is 9.4. This is a very competitive business, and Kroger and Walmart could definitely eat their lunch literally here. And Walmart has come out with Walmart Plus, where you get free shipping if you join the Walmart Plus. So it's really it's a tough business to be in, but they're trying to distinguish themselves as a specialty, organic, and all that vegan type realtor, small store. The upside is their stock, they might be acquired. I have no idea if that's true, but also they have changed their strategy with the new management. They're going to smaller footprint stores, hoping to get the distribution centers closer, like I said. They're doing more online advertising, and they're not doing as many discounts as they were before. So I show 39 high, next high projection, 18 low. Current upside to downside 8-1. Relative value 4%. The PEG is 1, and PEGI is 1 because there's no dividend. So I have a return of between a low of 7.5% to a high of 13.9%. And I'll show you the SSG here in a minute, which has a buy up to 23. I think if we're buying it, we should stick to a range of like 20 to 21 at most. And as a value stock, who knows when the market will decide that this is worth more than it is. Here's the SSG. You could see how pre-tax profit and earnings have really zoomed up here, but I'm not really counting that in my projection. I did a projection starting from the annual. You can see here, I've selected annual, 6.1 and 9. Compare it to peers. So here's Sprouts, and these are the peers that Better Investing has as a default. Those could be changed if you want. you could see how the growth, 26.5%, much higher. Earnings per share, 77.6. Pre-tax profit. Pre-tax profit on sales. And return on equity. Certainly, compared to these numbers, it looks pretty good. Now, if you look at member sentiment from Better Investing, this is interesting to see what other people who have studied this in Better Investing think of the potential return.
Just to tell you, Talon.
Muted.
So this one here is mine, I believe, 6.1 and 9. 13.9 is my projection, which is actually the lowest one from all the other Better Investing studies here. If you look at those of you who are interested in technical,
Unmuted.
you look at stock charts, you can see that the RSI currently is 42, which is on the low side. 30 would be a buy signal, 70 would be an overvalued signal. And looking at, I like to look at FinViz here. So the analyst projections for the next 5 years is 13.52%. You could also see that Goldman Sachs on December 10th has downgraded the stock to sell with the projection of a price of 18. It's pretty close to 18 right now. On the other hand, if you look at Zacks here, it's considered one of the top-ranked growth stocks to buy for December. So they're calling it a growth stock. PE is well below the average. I selected the low price as 18, which is the average low price for the last 5 years. Using 18 as the low, using a high PE of 20, I come up with this range. Buy up to 23. Actually, the current price, I believe, is now 19 something. That gave me an 8.5 to 1 upside to downside ratio. And it gave me average return of 7.5% and high PE return of 13.9%. And that's what I have.
Okay, thank you, Ira. I guess I'll just kick off also. So yeah, like I mentioned, I have some experience with the store. There's at least one store near me that we use. It's not our main store to go to, but it is a less expensive organic food option than Whole Foods, but it's still a good shopping experience. And like you mentioned, the store layout is such that when you walk in the front door, you can really kind of see across the entire store all the way to the back wall. So the main center, the layout of the store is all open space in the middle, which is where the produce and the like bulk dry goods is. I think they have a bakery section as well, and then just over on the right side is some aisles where it's pre-prepared foods like chips and their like toiletries section, things like that. As far as analysis goes, I did a slightly different approach, but came up with nearly the same buy and sell ranges. I left the growth rates at kind of the higher values, 11% for revenue and earnings per share, to kind of match what was on Value Line. But I judged down the high and low PE from, I think you had taken the averages of the last 5 years. I just set it to be what was in 2019. So a high PE of 20 and then a low of like 23 or so, low of 14. And that, through the math, that kind of yielded around the same buy zones of up to like $23.70 for the buy. But yeah, one of the comments I think you already made was the low profit margin, which is not a surprise for things like grocery stores, kind of razor thin profit margins. What was a little bit interesting is that from the visual analysis, the pre-tax profit line seemed to be flat, if not going down slightly over the last 3 or 4 years, but earnings per share was growing at a fairly good clip. I don't quite understand why that is. I'm sure it works out in the math, but it's not coming to me at the moment. Other than that, seems to be a good company. Like I said, we use them here. It's not as like highbrow as Whole Foods, I guess, but they're also not backed by $1 billion. Amazon owns Whole Foods now. We haven't exercised our the delivery option with Sprouts, but I would share the same concerns that like Instacart would eat into their profits, just because I think they levy a whole bunch of fees on those sorts of things that the store has to pay. But overall, seems to be a good company, and seems like a reasonable price point at the moment. Other comments?
Yeah, I got a slightly higher buy price, up to 26. I knocked the growth down to 10 from 11, and got rid of a couple of the high PEs, so I knocked those down a little bit. So we're in more or less in the same range, a little higher. I buy up to a little bit higher price, but it's well below that now.
What did you use for your high and low PE?
I was just looking. I used 22 for the high, and I used the 52-week or the recent market low of 13 for the low price. Not okay. So I think 20 was the PE I put in, but it ended up with a or 18, I mean. But it ended up with a higher price than the recent low of 13.
Okay.
I didn't mention the quarterly data, but I wanted to show that screen here.
Yeah.
So this is Liz. You guys ready for me here?
Yep.
Yeah, go ahead.
Yeah. So I used the preferred procedure calculation, and I came up with a 5-year compound annual EPS growth rate of negative 8.2%. And yet I did come up basically in your ballpark with the valuation, the buy and the sell range and all that stuff. So I don't know if I've done something wrong, or maybe that negative EPS isn't as definitive as I thought it would be. But I have a, my high price is like 42, and my forecasted low is 15. So, and I'm in the buy range up to 21.7. Did you guys use the preferred calculation or no?
I didn't. I just set the two values to be the same, 11% across the board. But the negative growth rate, that was, you were seeing that in the preferred procedure itself, or that was the like compounded annual growth at the, like on the second page?
That's on the first page where you put the EPS in. You do your forecast, your EPS.
Uh-huh.
I don't know if I can share my screen here.
Yeah,
I can show you.
Liz, I used the preferred procedure too, and ended up with it knocked back the growth, sales growth from which was 10% to it predicted an earnings growth of 6%, 6.4. So I had the similar thing happen. But I am puzzled by why a negative growth would end up with a positive recommendation. I'm not sure it can deal with negative growth correctly.
Right.
I've had problems with that before. You wouldn't think it would be a stock to buy if it was going to be lower. If it's going to get smaller in the future.
Right. And then on the chart on the front page, my I'm trending down on my EPS at 2.25% over like the 5 years. So I'm not up straight in parallel. It's trending down, but it still comes up a buy.
Weird.
Yeah. So maybe Jack, you and I can do a little mentoring and see where I don't know, see what I did.
Yeah. If you look at the value at the moment, the earnings per share at the moment, it's higher than the projections in the next couple of years. And for that matter, it's higher than the projection in 5 years by a little bit, so it would be slightly negative.
Mhm.
I think I used the end of quarter start instead of the last annual start, and that bumped it up a little bit, even though growth was down. But I don't understand what exactly we've got. So yeah, let's talk about it offline.
Yeah. Okay. Other than that, I read Morningstar, and their analysis it seemed like this company has like so much competition, like they're never gonna make it. But I think it's a good concept. I think a lot of people are looking for an alternative to whole paycheck, and I think that there's also a number of people that might be looking for an alternative to the mega company of Amazon to do business with. And it seems like there's a lot of room for growth that if they were to expand.
Yeah, that's their strategy. Also, I once tried to buy quiche at Walmart. Forget it.
Hmm.
It depends on what their target audience is here.
Yeah, Liz brings up a good point that the whole Amazon buyout of Whole Foods kind of soured me on. I used to love going to Whole Foods. That was my store of choice just because it's close to me as well. But the Amazon buyout and how they push you, to buy a Prime membership when you're checking out and everything kind of soured me on that whole experience. But they also have, very deep pockets, and I think they could run at a loss in order to undercut competitors. And I think Ira mentioned that there was some talk of maybe as a buyout or an overtake candidate. Maybe, Whole Foods would just buy them out just so that they get more, real estate or storefronts that they could change over.
Yeah. Hi, this is Sriram. I just wanted to, in the big picture, I got similar numbers that you had. I think my numbers are within the buy range. I think my buy range is up to 22, I believe. Yes. But the challenge with grocery stores is always, how they will survive and how they will flourish. Here in San Antonio, in the Texas, southern part of Texas, we have the big company called HEB. They are very well managed, and they put several businesses out of here. For example, Kroger used to be a big business here, but they didn't survive for too long. So I would imagine Amazon can do the same thing with Sprouts. We do have a couple of Sprouts here in San Antonio, but I never had a chance to go visit them. So I don't know personally anything about it. But if we decide to buy this, can we buy this as a short term? Maybe set a target of what we want to gain as a profit and look into it maybe a year or two down the road?
I think it's doing well in the pandemic. Its growth and profit numbers look like Dollar General, actually. Just going up at a much steeper rate than before. So I'd say this is one where we should if we buy it, we should reevaluate it whenever the vaccine takes hold within the next 6 months or so.
Yeah, I discounted the pandemic growth in my forecast.
That's right, you did completely, and it's still a buy.
Yeah, Morningstar did mention that they thought they're having a bump because of the pandemic, and then once that's over, then they're going to get eaten up by the competition.
What, Ira, remind us, is this what is the capitalization size? Is this a medium cap or small cap?
Medium.
This is medium here. I had that here at medium, 1 to 10 billion in sales. The current sales were like 6.2 billion.
Okay.
So it would fit in our portfolios. We look for medium and small for our portfolio, and fewer large. So in that sense, it fits the portfolio.
Yeah, it's good for the medium. Yeah, I think it's worth trying, even if we have some weather eye out for what happens after the pandemic.
Okay. Any other comments on this stock? Okay. Well, thank you, Ira.
Is Steve here?
No, he said that he wasn't able to make the meeting. He sent me a text earlier in the meeting.
He's on the list though as a staff member.
Oh, did he join?
He's maybe he's turned off.
Oh, okay. Well, if you can hear us, Stephen, you're muted. Okay, well then, why don't we move on to review of our current stocks that we're holding. Ira, if you want to jump to the Bivio screen, I'll start off with Fleet Core. Let's see. So not a whole lot of news on Fleet Core that I could find. The one thing to mention is just that the stock prices returned to levels that we last saw in February. It's up to $273 per share. Unfortunately, out of the buy range, or the buy is up to 233, so I have it in the hold range at the moment. But not a whole lot to report on, at least that I could find for that. For Athene, I just saw that it's part of the bankruptcy restructuring for Hertz Global Holding, which is of the rental car company. They'll sell a subsidiary called Donlen Corp, which is fleet management leader, to Athene for $825 million. Athene commented that they have capital available to further grow the fleet. And I guess also you mentioned, Ira, that investor advisory, did they discontinue following Athene because of the complexity of the business?
That's right. I sent you their info.
Yeah. Okay. It's strange that they, I wonder if the complexity like increased, or they just didn't look into it deep enough before they signed them on as a stock to follow. But anyway, I currently have it in a buy range if we wanted to increase our holdings. It's currently $42 a share. Our buy is up to 49. And then Tractor Supply, some analysts think that even beyond the close of the pandemic, that folks will still spend a little bit less on entertainment, and therefore like stay-at-home stocks will benefit. So things like home improvement, streaming services, entertainment at home, as well as things like Tractor Supply. They have a new distribution center planned for Ohio, 375 new jobs by end of 2023. I think they're starting construction in April of next year and aim to finish about a year and a half later. And they also apparently have exceeded their carbon emission goals 5 years early. So they've reduced to lower than target levels 5 years early. And they continue to invest in renewable energy, solar energy for their stores and things like that. I currently have them in a hold. They're at $138 a share. Our buy is up to 66. And so that's all I have. Steve is still not with us, so we'll skip to Ira.
Okay. Regeneron, the big news was they got emergency use authorization for their antibody treatment for COVID. The stock, however, is not really responding to that. In fact, it's kind of drifting downward somewhat. It's at 480 right now. It's actually went into my buy range. The important thing with drug companies is it's not so much this COVID, which could give you a short-term boost. It's the pipeline, and it's the drugs that people take consistently, like daily or weekly or whatever, that really makes money for these companies. And they're I sent out a new value line that just came out December 4th. Their pipeline, they say, is competitive, and they have like 20 compounds which are in various stages right now. So, it's looking really good for Regeneron. I don't know why the market is kind of drifting around there, but they say that that's not untypical for them. So anyway, I sent out a new Gentex value line as well. I have that as a hold. Their bottom line estimates were increased by value line, and they expect revenue next year to rise 15 to 20%. nothing else new with them.
Okay, thank you. Jack?
Dollar General reported earnings earlier this month. They beat expectations at $2.31 per share for the third quarter. Same store sales went up 12%, which drove revenue up 17% to $8.2 billion in the quarter. The gross margin went up to 31% from 29%, and administrative costs went down from 21% to 22%. No, to 21% from 23%, sorry. They did not, however, provide any guidance. I think they're a little uncertain about what is going to happen as the pandemic winds down. So that kind of spooked people a little bit. I have them as a hold. Essent, the third quarter earnings were $1.11, which is down from $1.49 last year, down 24%. They beat expectations, though, by 17 cents. Quarter three revenues increased a little bit, beat expectations by $3 million. They're so what's happening with them? It looks like their debt went up. It almost doubled from 30% to 60%, because they want to get their reserves up, because they're worried about the number of defaults that are going to happen. Essent still, though, in the hold, it's still ranked as one of the fastest growing companies with the highest PARs that you can get around here. And I'll do the checklist too. DHI and Vive are both holds, and Five Below is now a sell. That's it for me.
Okay. Okay. Thanks, Jack. Liz?
Okay, so we have Middleby acquired Wild Goose Filling Systems, which designs and manufactures liquid filling systems for craft beverages. So it's Morningstar says they think it's going to be a strategic fit for Middleby, and let's see here. I have it in the hold range, and it's doing really well. It's a surprise to me, given the restaurant industry, but I think what's happening is Middleby it's not just restaurants, they have a lot of other sort of things that they do. So, and I think that this is a good move for them with the Wild Goose, with the beverage filling. So yeah, they're doing well. Then we have Ulta. Ulta had their earnings call recently. I have them in the hold zone. They have rolled out a conscious beauty line, which is clean ingredients, cruelty-free, vegan, sustainable packaging, and also highlighting brands that give back to the community. And then They were going to expand into Canada. They put that on hold. They their sales are still down, and I think that they had in March they had closed every store, and then with the as the pandemic progressed, they've opened stores. So given that they basically went to all online for 3 months, I think that they had a net sales decrease of 7%, which I don't think is so bad compared to last year. It was this year it was 1.6 billion, and last year it was 1.7 billion for the third quarter. So that doesn't seem like a drastic drop. I guess that's about it for them right now. Again, they're in the hold range. Okay.
And they're going into Target stores, right?
Yes, they are going into Target as well to expand their customer base and hopefully expand where they can sell. But also, I guess the one of the other intentions around that is to give the Target customers sort of an in-store experience with Ulta, in the hope that they'll then go to an Ulta store and get salon services.
So this is like a small little Ulta storefront in the store, or they're just going to be selling Ulta brand products?
Yeah, it's supposed to be more like a little Ulta store to give the full experience in the Target.
Okay.
Hmm.
All right. Thanks, Liz.
Yep.
Sriram?
Yes, I have the Miller Industries and INS. Both of them, they didn't have anything major in major information or major changes to them. Both of them, they had their quarterly meetings in the beginning of November. So I gave you a detailed report on that. But since then, and like I said, INS seems to be very cautious about how they're growing and how they want to establish. Miller seems to be picking up as the more of their sales seems to be projecting upward. So both of them, for the latest, Miller is just outside of the buy range for me, and for INS is also it's close to the buy. I think it closed on Friday at about 43. But I wouldn't recommend changing anything on these two at this point.
Okay. Thank you. Steve had sent me a text. He said that he jumped on while he was driving, and that's why he showed up in the list. But I don't think he's tuned in anymore. So he'll send us an email, I think, with coverage of his companies. But it didn't seem that he had any earth-shattering news to share on those. Okay. So then, do we have any motions to buy or sell?
Do you want to buy Sprouts?
Unmuted.
Yes.
It seems reasonable. I think looking at what we're covering, we're all tracking 2 companies. I have 3, so it would mean going to a third company for someone, which is not outside the realm of being comfortable. Sprout seems like a good company. We'll just have to track it to see if the fears of either a buyout or like Amazon just lowering their prices in Whole Foods and driving them out of business. But as far as I can see, the business has been humming, at least at the one that's near me. So I'd be on board with buying Sprouts.
If that is the case, I make a motion to buy about 100 shares of Sprouts.
Okay.
Okay.
Yeah, it's about $20, so give or take.
Liz, was that a yes from you also?
Yeah, I'd go with that. I'm kind of on the fence, but I feel like they're the underdog, and I want to give them a chance. Which I suppose, which is not very logical, right? But
No, I mean, I think this is where I think probably our discussion of selling stocks will be a good part to decide this as a short-term, set a goal for how much we want to get, and maybe decide after that.
right. Yeah, I mean, if they had a Sprouts in my neighborhood, it sounds like a place I'd like to shop.
Yep.
Yeah, I'd go. Give them a shot.
Okay. Was the 100 shares, Shriram, was that just a round number, or do we want to just buy as many shares as we can with the cash we have on hand?
That's our usual approach.
Yeah, I'd say we just load up on it. So yeah, buy as many as the 2304 can get us.
Okay.
Yep.
So just to backtrack, though, I think that the recommendation was to buy it at was it around 21? Did you say, Ira?
I suggested in the range of 20 to 21. 21 being like a max. It has not really gone up, but well, in the October report, it was at 21.34, but it's been in that range pretty much for the last several weeks. So I don't think we'll have a problem. We might even get it below 20.
Yeah, it closed at 1969 yesterday.
Yeah.
Okay.
Okay.
So, Jack, are you doing do we want a limit order of buy up to 20 with the available cash?
21.
Yeah.
Up to 21? Okay.
I'll do a limit up to whatever price is. 21 will be the max.
Yeah. Okay.
Well, the way we do limit orders is we try to get the best price with the limit order.
Yeah. Right.
Okay.
So I'll look at what that's trading at Monday morning and set the limit for then.
Usually we try to get closer to the bid price than the ask price.
Yeah. No higher than 21.
Yeah.
Mm-hmm. Okay. Any other motions for selling anything that we hold?
Should we sell Athene? Ira, do you think that's still a good idea?
Well, I wouldn't rush into selling it. If you want to sell it, I would suggest selling half of it, or something like that, not the entire 14,000. But they said, "Oh, well, this is a good stock, but we don't understand it." That's what they were saying. So I'm sort of wishy-washy about selling it, I guess. Steve said we should sell it when he saw the write-up.
Yeah. I think it's. Sorry. Go ahead, Liz.
I was just going to ask, does this fit into Shriram's talk about when to buy and when to sell?
Sure.
Yeah. We can come to that. Yes. So let's go back and is it too early for me to present this?
It's the next item on the agenda. We can also, like, if we're motivated by what we talk about here, we can always circle back and make another motion to sell something that we hold. But yeah, if you want to take screen presenter rights, or I can present it.
Yeah, if you can, let me see. How do I take the screen presenter rights?
I'll give it to you.
Yep. Can you see my screen now?
Yes.
Yes.
Awesome. So based on the presentation I made, I think back in October, this is the draft items I think we should consider when we sell the stock. Number one item, let me see if I can increase the, yes, I enlarged it a little bit, hopefully you can see it better. So the number one item I have is the stock watcher. That's whoever is reviewing the stocks monthly or portfolio. They should make the recommendation. I think that'll be the best person to make a recommendation on keep or sell or add. The next two items, changes in fundamentals and target price sell. We need to come up with basic ideas about if something changes, either the management, we can come up with a scaled formula or something like that that would give us an idea of what to follow and how to do it. But we need to have for example, come up with some ranges for the metrics. Say if the PE for this company comes between this, is it a good point to look for sell? Again, this is something that we need to come up with ahead of time. Item number 4 I have here is the balance the portfolio. Again, if we decide that we are too heavy on an industry or too much on one area of financials, or a big chunk of our portfolio, and we foresee something happening in the Biden's administration in the next year or two, what's going to cause us to worry about, and maybe that's another thing we need to come up with some rules for that. I like number 5. I think if we have a better stock that we can invest in, we should go with that. These are some of the recommended approaches I have. Again, we need to come up with, probably I need to sit with one or two of you and come up with some metrics for each of this item. And then, can you think of any other reasons why we should be selling a stock?
I think the one that the Athene example is that we don't understand, or the people that we rely on, the IAS in this case, that they don't understand the company anymore. I think the example they went through was that it's there were several changes associated with changes in the profit of the company associated with how they treated the Hertz purchase, I guess. That just got them all messed up. And so I think there were 3 changes that put the earnings up and then down and then up again. So the IAS just threw up its hands and said, we don't understand this company, we're not following it anymore.
Yeah, I think that is a good sign. I think the fundamentals of the company are not stable.
If you want to show my screen, I could show you what they said and we could review it.
Yes, so how do I unshare?
I made Ira. Just for reference, you can right click on the name and the control panel and choose presenter or make presenter.
Okay.
You can see this now?
Yep.
Yes, sir.
Okay. So
Yep.
this is what they said.
Yep.
I like the sentence, investments include esoteric derivatives that are primarily reported a quarter later.
Yeah.
Well, I don't feel so bad scratching my head trying to understand exactly what they do also.
I also backed away from this company. I've never owned it, but I never could figure out how to own it.
Hmm.
Okay, well, it sounded like something to think about. Maybe do we take it as an item to look at it, do an additional refresh of the stock analysis and discuss selling it at next month's meeting?
Yep.
It looks like based on the portfolio status that the price has dipped, but it's recovered. So we're almost back to, like zero change at the moment.
Yep. We could also look at selling Essent to harvest the little loss, and buying it back at the end of January, beginning of February.
How much in realized gains do you have?
I'll
I
show
think it
you
was
that.
5,000 or something.
Here, I'll show that report. 5,566.
Yeah. So this would offset about $1,700 of that.
Do we think that's worth it? I mean, is Essence fairly volatile and we won't be able to get back into it at a good price, or?
I don't think anything's going to happen in the next couple of months. And we are going through the, unless a miracle happens and Congress does something, we're going through the eviction deadline, no eviction deadline soon. So things are going to change. So things might change a little bit, but I don't think a lot. So I think at the end we can make a decision in our January meeting or February meeting to buy it again.
Yeah, you have to
It's a
wait at least
30-day
31
window.
days. To avoid the wash rule, you have to wait 31 days before you buy it again.
Yeah.
And your next month's meeting is early in the month, so you probably, if you decided to rebuy, you would need to delay the purchase out that
Right.
long.
Right.
Which I think we can do. We could just set it as an item for Jack or whoever to,
Yep.
set a buy up to limit, and then they put the order in a couple days later or something.
Yeah.
So
Okay,
just
I guess go ahead.
I'm sorry.
Is there a motion to sell that?
I just want to clarify. So the reason to sell Essent is to do the tax loss harvesting. Is there any other underlying reason that is that matches up with Shriram's suggestions?
Well, the Essent has been doing better of late, so we did have a lot bigger loss, but the last 6 months or so, 3 months anyway, it's been the price has been coming up. So there's no particular reason why at the moment they have. There is something funny going on with its profits because of the pandemic. It's and as I said, its debt has doubled from 30% to 60% of its holdings of its capital. I mean, so there's some warning signs, but I don't think I would. I still have it as a hold, not a sell from its fundamentals. There's some worrisome signs though.
Okay, because so we could say that the fundamentals have changed and that their debt has increased dramatically, and that would be
but we
reason.
know why. We're just uncertain about the long-term implications of that.
Okay, and so maybe add to Sriram's list about one reason to sell would be to harvest the tax loss.
Yeah.
Yep.
Yes.
Agreed. Okay,
That will be item number 6. Yes, thank you. If you can think of something, let me know.
So my question is, if we were to sell Essent and we weren't able to buy it back, would you think that it was still a good thing to sell it?
Yes.
Okay.
We only lose a month or so of the opportunity to make money in something else, and we'll sort of set that $14,000 aside for a month. I think that's okay.
And we're going to sell Athene at a loss as well.
Yeah.
Well,
are we?
I don't think we were gonna. I was proposing that we look into Athene and discuss selling it for next month at next month's meeting.
Okay.
I think the motion on the floor right now that I'll throw out there is that we sell what we have at Essent to harvest that tax loss, and then at next month's meeting we discuss: is it still in is it in the buy range, and would we want to reinvest in it, after the 30 days or 31 days has elapsed? Okay, so is anyone in favor of selling Essent?
Yes. Am I the only one?
Yeah, I think there's only two people.
No, are you proposing to sell all the shares?
Yes.
Sell all the shares of Essent to reap the 1,500 of tax loss.
Yeah, I support that.
Sriram asked a legitimate question. Can we look at was it all purchased in one holding, or was it purchased in several?
We could look at that. Let's see.
Tax lots. It's in the first group on the right at the bottom, right bottom.
Okay.
Up.
Investment tax. Oh, there it is. Yeah. Okay. Got it. All right. Okay. It was 2 lots.
Yeah, there's 2 lots and both of them have losses. So that was a legitimate question to ask, because otherwise you might only want to sell the one that had a loss in it.
Yeah.
So my question is, how much of a gain is it offsetting?
There it is, 1,570.
So,
$1,570.
Right, and this, I guess I'm assuming that, okay, so we sold something at a gain during the year.
Yeah.
Okay.
Yeah, and this is the report.
Okay. Right. Okay. Yeah, I would go with that to sell it.
Okay.
I guess
I
I
were-
abstain. I abstain. Just now that 1,500 doesn't bother me one way or another. I guess.
Mhm.
And then we have 14,000 just sitting there for a month doing nothing. So I like to be in the market.
Yeah.
That's a good point. It is a lot of money. Well, no, let's see. It's
Yeah.
Yeah.
It's like 15,000. Well, maybe this might be a good time to think about. So one of the things that Sriram had put on his checklist was you want to get into something else, and so we really don't have that on the table here. So yeah, what's the alternative? What are we going to do with that money?
Again, you're proposing to do this in month of January, correct?
Yep.
So Jack has a stock to study in January. Maybe he'll come up with something to buy.
Well, maybe you want to, if you do sell it, maybe you want to put some of the money in Sprouts because 2,300 is not a lot for this portfolio.
Mm-hmm.
Yep.
In that case, I would probably agree. Not all of it. I wouldn't put all of it in Sprouts. But
Want me to bring it up to one of our others, like Miller, up to 7,000 or so?
But Miller's not in the buy zone.
No. I mean, do you want me to bring Sprout
Yeah.
up to about 7,000 or 8,000?
Oh.
right, up to a 3 or 4% level of portfolio would make sense to me.
Right.
So if we
Okay.
did that, I would go. I agree.
Okay.
And so if we want to get the loss harvest for this year, we have to sell it this year, right?
Yes.
Right.
Would does anyone have any, like, if we sell all of Essence, maybe put half of the proceeds, I think with the cash on hand plus the sell of Essence, that's around, we'll call it $16,000. If we put 8,000 or so into Sprouts, that'll leave 8,000 kind of in cash.
Yep.
Would anyone have any heartburn that we would only have 8,000 to reinvest in Essence if that's if it's still reasonable to buy in January?
Yeah, I think
I think
I'm
that's
good with that.
okay. That'd be the one, I think, opportunity lost, is that you could put the proceeds from Essence into something else, but then we don't have that money to reinvest in Essence,
Right.
to kind of complete the wash sale.
We're also going to be deciding next month on whether or not to sell Athene for
Mhm.
different reasons. So we might have money to invest.
True.
Okay, so then I guess I'll propose a combo here of we sell all of Essence and then we take approximately $8,000 of cash on hand and some of Essence and invest in Sprouts.
I
I'm
agree.
good. That's good.
Plus whatever the cash on hand. So it'll be $10,000 worth of Sprouts.
No, I was
think
just going to
8,000
split the
we're shooting
difference.
for, which is
Okay.
about 4% or so of the, a little over 4% of the
Okay.
portfolio.
So that'll be 15 plus 2, about 17 plus. So we'll be left with about 9,000 cash.
Yeah.
Yeah. Okay. I'm good with that.
Okay.
Okay, any
Okay.
other motions? Okay, hearing none, we'll move on then. So we talked about the reason to sell checklist. Thank you for presenting that, Sriram. I think you walked away with a couple of notes and something to add for the wash sale on that. If other folks have other things, shoot them over to Sriram, and then we can add that to our document list.
Yes. Anybody want to help me in putting some metrics
Yes, I'll work on that with you.
Thank you, John. Yeah.
And ideally, if we put metrics together, it's something that we, maybe we define those when we buy the company.
Yes.
And yeah, ideally it would be a, auto refreshing report or something that we look at, and it triggers you invested in this company 3 years ago and this is the limit you set or something. Consider, looking closer into this.
Yes. That's exactly my purpose. Yes.
Yeah. Okay.
Oh, I had a
Excellent.
question. I had a question about, so once a stock gets into the sell zone, that zone, sometimes it can be, a pretty wide zone. So how do you decide like where in that zone you're going to sell it?
I've always viewed the sell zone as not a you must sell. It's a like reassess the company and see if the fundamentals are the same, and maybe reap some of the growth that you've done. Because a company has grown in value, I don't think necessarily means that you want to sell all your holdings. If it's still a viable growth candidate, they still have a lot of business opportunities, customers still like them, things like that. So I think once it's kind of growing by gangbusters and it's into the sell zone, you redo the analysis, and if they still have plenty of room to grow, continue holding it. So there's no hard and fast rule, I would say, to when to sell.
Yeah. Especially when you're holding your stock, from what I understood, if it's still in sell, if it goes into sell, it can still be a hold. If it makes sense. Jack, I will get with you and we can put some numbers together on ranges.
Okay.
Excellent. Thank you.
Okay. Other item on the agenda is our annual election of officers. And I'll remind folks that I believe starting next month, we are enacting the 2-year term limit. So I believe, I know that now that Stephen's not here, we should elect him president, but that's not probably the right thing to do. So
that'll teach him.
Yeah, I'm happy to continue in my role as president. I'll speak for Stephen. I'll assume that he's okay continuing in his role as vice president. I believe for treasurer, assistant treasurer, and secretary, there's some changes we want to make. So Jack and Ira, how do you see this working out?
Yeah,
I'm running for assistant treasurer.
I'm running for treasurer.
Okay.
Which means secretary is open for anyone that wants it.
Okay.
It's a wonderful job.
Yes, I would actually encourage maybe our newest members to consider doing secretary. I think it's a great learning experience and, way to record what's going on and, checking on the portfolio value each month and things like that.
I'll be happy to do unless Liz wants to do it.
No, I'll let you do it, Sriram.
How gracious.
Yeah.
Okay.
No, that's fine. Yeah, I'll be happy to do that. Put me down.
How are you at YouTube, Sriram?
I'm sorry?
How are you at YouTube?
Not very well, but I will learn.
Okay. I'll help you with that.
Yeah, please. I need all the help I can get.
Okay,
One thing
so
I want to have us consider for the future is that the vice president automatically becomes president after the term of the president is up. We don't have that as a requirement in our operating procedures right now, but other clubs do that. So I don't know if we want to do that or not. I just want to throw that out right now.
Okay. I think that's a good decision point. Also, one thing that I was wondering about how we worded it, was it a 2-year term limit total or just 2-year like non-concurrent or non-sequential?
2 year, yeah, 2 concurrent years. 2
Okay.
sequential years. That's what I'm trying to say.
Okay. Okay, so I have myself for president, Steve for vice president, secretary is Sriram, treasurer is Jack, assistant treasurer is Ira. Any objections to that list of officers? Okay, I will consider that unanimous. Congratulations, everyone. And then, so yeah, offline, I guess Jack
It was
and
big.
yeah, no recounts, no nothing. Sriram and Jack will tag up offline to do the handover for secretary stuff. I think for treasurer, you guys are in good shape, so that's good.
Yep.
And then we'll, I think, put it as a discussion point maybe for next month or in the future. Ira's point about vice president proceeds into the president role, at the end of the term. Okay. Let's see. I'll take ownership back here. And then the only other thing was we'll just touch on future schedule for presenting. Jack, I have you down for.
Yeah,
Go
I
ahead.
have a item that we need to talk about. We need to
Okay.
we need to schedule a audit, arrange an audit for sometime in January, so we can be ready to go with the so the treasurer and assistant treasurer can have good records to go by for the tax return, which is due. We want to try and aim for getting the K1s to everybody by February 15th, which means we need to have the audit done by the January meeting. I'm sorry, by the February meeting.
Okay. So I think, yeah, we'll add club audit to the agenda for the January meeting. I think it's generally something we can do over in the course of the meeting.
Yeah, this might be
Or
more
does one-
complicated because we have two
Two brokers.
brokers accounts to deal with.
Okay.
So we'll have two sets of 1099s. So it's just a little more work.
So is it something that we want to, like I would say we could schedule a, separate meeting just to do that if we think it's going to be excessive.
I think that might be good because, yeah, I think that would be good.
Okay. The previous weekend is the second, January 2nd. That might run into people's
Yeah.
vacations.
I have plans to be hungover that day.
Okay. Well, that's good. We could do maybe a weeknight or a weekday, weeknight, if that works.
Yeah, it's fine with me, but I don't work, so
Right.
I'm the least constrained.
Okay. I guess ideally we would come to the January meeting with the results from the audit, right?
February meeting. We'll do it in January. I'm sorry, we'll do the audit in January. So if we can do it
Oh, okay.
before January 9th, that would be good. But the only thing we'll have is the broker reports and Bivio. So if we get the part done where those are matched, which I think shouldn't take that long, just a little bit of time, then we can look again at the when our 1099s come, which would be in February, early February, and be able to get the K1s out by the middle or end of February.
Okay. Well, then why don't we, maybe we'll schedule start going over it in the meeting in January. If it looks
Okay.
to be way too complicated, maybe we bump it to the following weekend, like the 16th of January or something, to finish it. And then we would have results in time for February. Does that work?
Okay. I think I sent you, Brent, a audit form from Vivio. So we can use that at the January meeting.
Okay. Sounds good.
I have some things from several of our visitors. Christian suggested Visa as a stock to look at. Ron, I'm not sure. You noted the sell zone, but you did not indicate which stock you were talking about, so I don't know which one that might be. Marcia suggested that we look at an article on selling that was either in the BI magazine or Kiplinger. It had a couple of extra things on selling when you might need the money, and she indicated specifically when a long-term member has decided to depart the club. We had a question about whether members of your club were going to, any of them, you going to attend Bink in May. And I told her I didn't know because I hadn't heard y'all say anything yet, but I did tell her that I would be there. Somebody wanted to know when the club start date was. I know you said it early and I could not remember, so I said I would ask for that answer now.
January
Okay.
2008.
January when?
2008.
2008. Thank you. I think that's all of the ones that I could not answer off the top of my head.
Okay.
Well, we own Visa.
We own Visa. I agree. I think Sriram, if you want to add to your guidelines for selling, I think the cashing out a member that's leaving, that's a viable reason as well. So that's good. I'm personally not attending Bink. I don't know if anyone else is.
I indicated I thought Sriram might go because it's only a couple 100 miles from his house.
Mm-hmm.
Is it going to be in person or virtual this year?
It's going to be in person, we hope. That is the
Okay.
plan. And I'm going to the update meeting this next week, so I will know more. I don't know that I can pass a whole lot of it on, but I will know more than I know now.
Okay.
Hope you get inoculated before you go.
No, it's online. Oh, you mean for the in person?
Yeah.
I'm not real worried about it, but I'll do whatever I need to do.
Did the person that mentioned the articles, was there a link or a title of the article or anything?
She did not have that. That was Marcia Chichinsky, maybe. And I do remember seeing the article, but I can't remember which magazine it was in.
The one in the Better Investing, I already looked at it. That's part of the discussion we had in October, but I will do the Kiplinger research and I'll find out. Yeah. Okay. Actually we did that in the past, that when somebody left, we had to make some profit and cash out some.
Okay.
Yeah. That's a good point, and I'll add. Thank you.
That's all I had, gentlemen.
Okay. Thank you. So for January, Jack, I have you for stock to study.
Yep.
And Ira for education segment.
Right.
I corrected Sharon Watkins' name on this. She's slated for March. Have you gotten any word from her, Jack? Or we should, if not, we should reach out to make sure she's on board for that.
She is interested in having a mentor, and I'm not sure if one of you would like to volunteer for that job.
If no one else volunteers, I can volunteer.
Okay. Thanks, Brent.
Yeah, so if you want to maybe send an email to her and copy me, and then we can start the discussion.
Okay.
Okay, anything else? Sounds good. Let me jump back to the presentation here real quick. So thanks everyone for attending. Like I mentioned, second Saturday of each month, so our next meeting is January 9th. Be sure to register at betterinvesting.org if you received the invitation from someone else, so you always get the latest reminders of when the meetings are occurring. Any questions or anything we didn't cover, or if you're interested in joining, reach out to Jack Finn at the email address there shown there. And stay safe, have happy holidays, and we hope to see you in January. Thanks, everyone.
Thanks.
Thank
Bye.
you. Good meeting.
Happy
Bye-bye.
holiday.
Bye.
Happy holidays for everybody.
Yes.
Safe holiday.
Happy holidays.
See you in the new year.